In this video, I want to show you guys exactly how I made over 6% trading NZD USD today. Okay, starting things off here, number one on our list is we need to see a strong break of structure on the higher time frame. Okay, so our higher time frame in this example is the 5-minute time frame. Okay, so let's play this on a little bit. So you can see we have a strong break of structure to the downside. This indicates that sellers are in control of this market and therefore we are only looking for shorts on this trade. We can mark this on as a BOS, so a BOS to the downside. And the reason why this is a strong break is because you can see the momentum and the size of these candles, and they're also all bearish candles. Okay. Once we've seen a break to the downside, we can mark on a break of structure and we can then go ahead and mark on our guarded high. So our guarded high is our invalidation level of where we would look to exit the trade. Okay, if price starts to break our guarded high, this would indicate to us as traders that this sell bias that we have is no longer valid because structure may be shifting to the upside. Okay, so as long as price remains and cannot close above our guarded high, this indicates to us that, we're still in a seller's market. Okay. Number two is identify our point of interest. So number two, identify our point of interest, and this is simply where we are going to be looking for a short trade. Okay. In order to identify our point of interest, we need to identify the order block of which made this downward move. Okay? And that simply is the last up candle here, this last up candle before the strong move to the downside. And we mark on from the candle open up until the candle high as a zone. And this is the area where we are looking to take our short trade. Okay, so we've identified our point of interest. This is our extreme supply of which we're looking to short this market. If and only if price comes back into our extreme supply, that's then where we can look to take a short trade. Okay, as long as number three, our entry schematic on the lower time frame lines up within this point of interest. Okay, let's play this on a little bit and let's drop to the lower time frame here. So now we're dropping onto the lower time frame. This is where we're looking for number three, which is our entry schematic. Okay, we're looking for the lower time frame structure shift, and I'll break this down for you now slowly. Okay, so price comes into our point of interest, and let's zoom in so I can make this very clear. So we're inside of our point of interest, our extreme supply. This is where we're looking to short the market. Okay, and let's zoom in closely so you guys can get a good picture here. So in terms of structure, what do we have here? So we have a high. Let's make this green because this is bullish market structure coming into our extreme supply. So we have a high, we have a higher low followed by a higher high. Okay, so our entry schematic, what we want to see coming into this extreme supply here is this. So we have a high, we have a higher low followed by a higher high. We then want to see a structure shift breaking below this lower time frame structure, and then we can then look for an entry for a short trade. Okay, so we can enter based on a 50% retracement of this up move, 50% retracement here. We can then look for a short trade, stop loss above here, and then look to target the range lows. Okay, so this is the entry schematic that we're looking for in as a concept, and then this is the entry schematic in real time here. So we have a high, we have a higher low followed by a higher high. Once we see that, we want to see a strong structure shift to the downside. Okay, We can then mark on our break of structure. So let's mark that on here. You can clearly see we've broke structure to the downside here. Broke structure, break of structure to the downside. We then have a new lower time frame guarded high. So this is our lower time frame invalidation level. We can then go ahead and mark that on. Guarded high. And then, as I said, we need a fib retracement from the low to the high. And we will be entering a short position just below that level there. Stop loss, a little bit of space, a pip or so above our guarded high. Give it a little bit of room to breathe. And then target will be based on the higher time frame, which will be down here to our liquidity. So we're targeting all of this liquidity to the downside. So the first target will be this equal low. Let's mark that on. So this is equal low as a first target. So liquidity, first target, and then ultimately we would be looking for some continuation. However, it's not always guaranteed that we're going to run all of these stops and run this liquidity to the downside. That's not always guaranteed. So it's important to take a lot of profits off around TP1, which is this liquidity here. So TP1 is going to be this area here, which is the equal lows. Okay. So let's drop back onto the lower time frame here and look at our entry. So this is the entry schematic. Everything's lined up there. We've had the structure shift. Entry would be just below the 50% retracement to make sure that we account for spreads, to make sure that we are triggered into that trade. Okay. We then wait for price to come back to our level here. Let's extend that across. And then we're triggered into this trade. So we got triggered in right here. Okay. Right here we're triggered into this trade. And then let's play this trade on. Okay. Remember, we're going to be taking a lot of profits off around equal lows, which is this area here. Okay, we're going to be taking a lot of profit off. Also, based on the back-tested data, it's important to take profit off around 3R. So if you risk 2% on this trade, so you enter here, you risk 2%. If price moves to a 3R, which is here, you would be up 6% on the trade. Okay, so that's a huge gain. So it's important to take a lot of profit off around 3R and also around equal lows. Okay, so let's play this trade on. Here. And you can see equal lows was smashed. Three risk to reward was also smashed here. And then ultimately equal lows. Okay, I want to play this on just to illustrate to you guys why you should be taking profits off the table. Okay, so let's play this on and have a look at what happened here ultimately. So play this on and look what happened. We have a reversal in the market. Okay, so that's why it's very, very important. It's absolutely crucial that you take profit off the table around equal lows. Okay, because if price or price is more than capable of reversing at these levels. Okay, so it's very important to take profit off at equal lows, because if they want to exit their positions here, price can bounce and ultimately, either stop you out of break even. You should of course be break even if you 2-3% up on your trade, move it break even, make it risk free. You shouldn't then be taking a loss on this trade. Okay, so it's very important to take profit at equal lows because price can reverse here, and it's important to lock in the gains. Okay, so just to summarize here, we have a strong break of structure. Number one, strong break of structure on the higher time frame. That's this here, this move here. Number two, identify a POI, a point of interest. That is this area here, this blue zone here, point of interest. This is where we're going to be looking at shorting from. And then number three is our entry schematic. So when we drop to the lower time frames here, what we're looking for we're looking for this structure shift out of our POI. So just to highlight that here, that's this here. This is our structure shift on the lower time frame, indicating that sellers are back in control of this market, and we can then look to take this trade to the downside. Okay, so I hope you guys enjoyed this video. Please like, comment, and subscribe, and I'll see you guys in the next one. Take care.